Hello, Namaste. This is Neeraj here once again, and welcome back to my channel Neeraj Shah Stock Analyst. So in today's video, I would like to discuss how to do investment analysis. So I will take up a hypothetical situation and then we'll go step by step that what to look into if that situation happens, because that is the way in real life practical situations happens, and in that you have to do investment analysis. So this is why I'm not giving you any theoretical like this kind of plus minus this that way. So now suppose you must have read about JP Morgan's the chairman's interview. It was, I think, last week. It had come in some Indian newspaper or magazine. I don't remember what, but it became viral in the full world. So he gave a what do you call it? His view or prediction was that next year US Fed, that USA Federal Reserve, that central bank USA, may even increase interest rates further. I mean, this is totally unheard of, because everybody is expecting that interest rate will not increase further, and it will remain it, even if it will not decrease, but it will remain it. So he gave a probability that if interest rate goes to say 7% and plus, what is the situation? So let us analyze this. So hypothetically, suppose that if the situation remains like, that oil remains around $100 right now, which is, it's near $100, so it remains around $100 on average next year also. And because of all this war in Russia also continues, and that way, as half of the Ukraine anyway has gone, destroyed. So agriculturally also, the food grain and all this problem, the supply will not be enough. So the food prices also remains higher, and because of the higher oil prices, generally everything will remain, because transportation is oil, right? So that is why the inflation remains on the higher side. And if that continues, that is the situation. That is what JP Morgan says, that it may go, US Fed may have to increase even interest rate in USA to 7%. If that happens, so what you have to look at in investment? So first thing is to look at is that it goes to 7%, then why should any US investors or the mainly foreign investors? So most of the investors, what you call FIIs, foreign institution investors, hedge funds, venture capital, they are almost based in USA, right? World over. So that money which is coming into emerging markets like say India, China, Korea, those kind of different markets, if next year 7%, then why should they, if suppose in India the interest rate remains at currently at around 6%, I don't know, 6.5%, yeah, 6.5%, the central bank interest rate, and Indian Reserve Bank of India, that is central bank, doesn't increase, even though the inflation may remain high, but it chooses to not to keep a pause because of the growth reasons, right? Because if interest rate goes up too much high, then the growth comes down. So in that case, what you have to look at is that just a common sense is that if it remains 7%, why should anybody come from USA and invest in Indian market, or any other European investors also, and come and invest in where the interest rate is 6.5%, and if in USA it is 7%. So everybody will invest into the USA market, because the bond, you can get the high bond yields. The second criteria is currency risk. So you have to look at that currency risk also. If you are a foreign investor, if you are living outside India, and if you want to put money into Indian market. So I'm not talking about here that NRIs or that Indian national living outside, anybody. If you are outside and if you are putting money into the Indian market or say Russian market or whatever. So what you look at it is that you look at the second point you look at is the currency risk. Because at X price, right now if you put money, so the US dollar, suppose a ruble is around 97, $1 US, and for rupee it's around 83.1 or 83 against US dollar. So a foreign investor or any investor living outside of that domestic market brings that dollar at that current rate and puts money into that, and then when suppose that inflation remains high, so what will happen is that automatically, even if the Reserve Bank of India or say Central Bank of Russia or any other central bank doesn't increase interest rates, then what happens, it's like reaction. If you put air into a balloon, if balloon doesn't become big, it doesn't blow, that means there is a hole. So it will go through some other. So the same way, if inflation remains high and if the Reserve Bank is not increasing interest rates, then currency will depreciate, exchange. So in case of suppose India, rupee will depreciate. And even though, Reserve Bank can try to save rupee by selling dollars into the open market, but still there is a limit, it will happen. And in that case, a foreigner investor has to also look into that, okay, I put money at 83 and rupee depreciates. So if I take money out of India when I sell my stock, so suppose it becomes 85 or 86, already I lose 3 rupees because when I will get less dollar when I take it out of India. That is what also the second criteria to look at it. This is how investment analysis is. And the third is definitely the local situation of that particular market, and particularly stock specific issues are always there. So one has to analyze the stock specific, which is called micro level. So, but first you have to understand this macro level picture. So, and also higher interest rate, what it does is, if you come to the micro level, is that suppose an X corporate, a company, you want to put stock into that. So you have to look into that. If the inflation remains high and if the interest rate remains high because of the inflation, so that company's how much debt is that in the balance sheet, and so that way his interest cost will also increase. So what you have to look at is that a higher debt a company, so that higher is, if the inflation remains high and interest rate remains high, then the debt outgo or the interest cost will also increase for him. That's why it will impact, what it will impact? It will impact the profit of that company, EPS, what you call. So ultimately that way also the profitability will decline and the price will decline. So this is another third criteria you look into, the micro level, at how much debt and how the interest rate and the inflation. You see, it looks so simple that inflation is high and what is it, but this is how it affects the stocks and the market. And the fourth is to look at is that discounting. When we look at what we call discounting is it's like cost of capital. Okay, discounting is called cost of capital. So the higher cost of capital, because interest rate is higher, so the risk premium also goes up for that particular market, because that interest rate and inflation situation remaining higher, that risk premium goes higher. So your discounting, or what you call PE ratio, that is also the discounting, that will also come down. So that way also the stock will decline, or the price or the market will decline, because the overall PE goes down because of the higher discounting rate, because of higher interest rate and the higher risk premium. So this is, in short, I wanted to just give you a very not theoretical but practical aspect of looking at a hypothetical situation, as to how to look at the investment analysis of any country, and then how to look into the micro level at any stock. So this is the just one small video I wanted to introduce like this way. So if you like this video, you please put a like, and if you want personalized investment consultancy, it is on a chargeable basis. You can write to my email, its details in down box below also. And for knowing about very unique ideas or some what is happening in the world, or some kind of a regular some updates about economic finance, then you can join my Telegram channel. That is also, the link is below in the description. And for my blogs which I write about whatever the situation, you can visit my website www.stateanalyst.com. and you please don't forget to write comments and feedbacks to my video if you like, and you can ask questions. That is how more and more people will watch it into, and more people will go to. So that is only because I am giving it all this, sharing my knowledge free of my experience. So I just request you, write comments, write feedback, and please put a like. That's it from my side. Ciao from 𝐦𝐻𝐷𝗔𝗛.